Dear crypto community and blockchain buddies across the globe, welcome back to Cryptonites, the no BS blockchain channel built with the community and for the community. And we're here live at the Crypto Compare Digital Asset Summit with another living legend, Ryan Radloff, CEO of Coinshares. A pleasure to have you, my friend.
Great to be here.
Yeah.
Pumped.
I'm pumped as well. So Ryan, you were just telling me a really cool story about your dad.
Yeah.
NFL?
Yeah, my dad is an American football player, actually born in the UK. Moved over when he was 13 and was a U.S. football player, played for the University of Georgia, won a national championship there, and then went and played for the Atlanta Falcons, San Francisco 49ers, and a couple other teams in the NFL. So he's there, he had a 10-year career. He's massive. I got terrible genes because I'm not nowhere near as big as he is.
But you got the looks,
yeah, right. That I got from my mom.
You got from your mom?
Yeah, I got that from my mom.
That's awesome. So the other day we were at another event and you were on a panel, and I think it was perfect except you forgot one thing.
What's that?
Drop the mic
before
you left.
Well, we had. I think there were some people on that panel that didn't see eye to eye with me exactly. That weren't very big Bitcoin fans, and those types of most of those people I like to listen to them, but I have some very strong feelings about kind of the center of this community, which is Bitcoin, whether people like it or not. So yeah, sometimes I get a little heated on stage.
It was very entertaining and really impressive. With regards to Bitcoin, so like obviously you're coming from a traditional, more institutional background, moving into the crypto space.
Yeah.
What are your best arguments to make someone who doesn't really understand, someone from the off-chain world, want to be a part of the Bitcoin community or network?
You know what's interesting is like what got me into Bitcoin was I was actually a student of money. I was a student of specifically the Japanese yen, the currency.
Really?
And I think what most people I talk to really can't explain to you how actual dollars and yen and euros work. And the whole concept of how you have about 8 people all over the world that print money out at basically whatever their the discretionary amount they want to print are. And it's fascinating to me how few people really understand that political movements, kind of handshakes, backdoor deals have a massive influence in how much money is created. And I think that is one of the biggest selling points for Bitcoin, because Bitcoin is a systematic, programmatic deployment of money supply. And that was really what got me into this thing. And I think, speaking of my dad, in 2008, U.S. families all across the United States got wiped out. And what happened is a bunch of bankers got in a room with the central bank and said, you know what, we just overlent to retail, we sold securities out to the rest of the world, and we have no more money left. Sorry, we screwed up. We need you to bail us out, and we need you to print more money to bail us out. And instead of giving money to the average person on Main Street, what they did is they printed money and gave it to the banks. So, when people are looking at and thinking Bitcoin is some crazy new world, you need to go back and look at the mirror and realize how ridiculous the other side of the conversation is. And I think that when I look at Bitcoin in context, that's the most important thing. I mean, we're all taking crazy pills here, right? One group has the amount of money decided about from 8 people around the world that have handshakes and deals like that with bankers. The other group is a grassroots movement that's software and a systematic approach to the amount of money. And I think that's the single most important thing. It's volatile, yes, but so is every other currency outside of the top 5, like dollars and yens and things like that. So to me, it's all about that. And that's what's got me in it. And that's why we'll remain in this space until that system is obsolete. We're not going to stop. And there's a lot of guys and gals like me that are preaching the same thing. And it's very important for anyone that's in the Bitcoin community on the other side to be able to speak both languages. You have to be able to speak modern monetary theory and macroeconomics to meet some of the opposition head on and win. Because without that, you're just a one-sided argument. So that's, to me, sorry, I get a little heated on this because,
that's great, yeah.
Because it's so important that people don't just get educated on Bitcoin, but actually on how money and currency works itself today, because it's absolutely ridiculous.
Is that the best step to go, like understanding like fiat currency and how money works as of today, and then studying cryptocurrency? Is that kind of the logical?
Definitely. I mean, I don't. When I speak to institutions, one of the first things I do is, instead of prodding about how much knowledge you have about Bitcoin or how much you know about the blockchain, what I like to do is I like to first understand how much they know about the U.S. dollar. and figure out what you'll be surprised at the higher level you go, because I speak to thousands of institutions all around the world per year. The higher up the food chain you go in institutions, there is no correlation to their understanding of the fiat currency system and modern monetary theory. Most of these investors spend their time studying net free cash flow, margin analysis of corporates, finance and economics. They don't understand monetary policy and monetary theory and how these things are interrelated. And of course, as you're making decisions on whether Bitcoin is something good or bad, without being able to communicate the other side, how could you possibly say Bitcoin is bad? So what's shocking to me, whether it's a retail person or whether it's an institutional investor, I want to know how much that person understands about the dollar before I even start with Bitcoin. And if they don't understand how bad things are on the other side of the fence, there's really no point in even trying to explain Bitcoin. Like, you have to go through that education process. It was vital for me.
That is so interesting, because you're right. If you want to judge something, it always needs to be relative to something else, right? Or else you can't judge it properly.
Otherwise, Bitcoin and digital assets in general look like this incredibly volatile kind of get-rich-quick scheme. And what most people face value, that's what they look at. What they don't do is they don't go the surface level down and realize the principles around why Bitcoin was created, not only when it was in the wake of the 2009 financial crisis, but why it was created, in terms of separating the system of money creation from just a few hands around the world to a people's currency that is distributed through a systematic computer program. And I think that core element is the most important thing our entire ecosystem revolves around. And trying to argue that without somebody having knowledge about why the other system is bad it's an uphill challenge. And I think most Bitcoiners don't do a good enough job learning the other side, and vice versa. Most people trying to learn Bitcoin don't do a good enough job understanding the current world they live in. So that's kind of the problem that Bitcoin faces, and why in its inevitable move upwards, it will take a long time, because most people don't understand currency in general.
That's a really good point, and that long move, like you're saying. It's funny because when you look at Google Trends and the amount of Bitcoin, what is Bitcoin, how do I purchase Bitcoin, there's so much activity in terms of research, but very few of them actually buy or use it.
Yeah.
Why is there such a discrepancy?
Well, let me challenge that a little bit.
Okay.
So what's interesting about it, you're right. I mean, there's certainly a lot more people will research or Google what is Bitcoin. We think about, there's about 50 million people that own Bitcoin globally, roughly, right? So if you look at the amount of exchange users and you look at the amount of blockchain.com wallets, whatever metric you want to use, we think there's about 50 million. Now, what's interesting about that is that if you look at the relative market cap of Bitcoin, it's about $150 billion market cap today, but 50 million people own it. That makes it one of the most distributed owned assets in the world when you look at a market cap per user ratio. So look at something similar like IBM. IBM's about $170-ish billion stock. And there are very few people that even have access to IBM. There's very few people that own it, right? A couple million, maybe, own IBM stock in the US. Bitcoin, 50 million people own something that's only 150 billion in market cap. That ratio is critically important. So yes, you're right, there's still a big discrepancy between Google searches to number of people owning it, but if you look at it in relative terms on a market weight adjusted or per capita basis, it's a massively distributed asset, and in the first 10 years of its existence, it's probably the most successfully distributed asset in the history of any asset. So the important thing to watch here is that over the next 10 years, if we can maintain the level of market cap per user, Bitcoin will be far and away the most distributed, widely held asset in the world. The other ones that are close are things like silver. And silver is a relatively low market cap, but it's a massive distribution because of silverware, because of jewelry, and that's good. Bitcoin will have its own things like that, its own jewelry, its own micropayment economy that helps it seep out into different users. So we expect one of the most important ratios is to carry that market cap per capita ratio. And I think you'll see it continue to grow because of how accessible it is and how intuitive it is at finding its way in these little cracks all over the internet.
Is that distribution and accessibility the definition of financial inclusion in some ways?
Definitely, no question. And the problem is people, the financial, where it's seeping to, it's almost like it's almost like capital controls and regulation is like the anti-gravity for Bitcoin. It's like the harder you push against it, the faster Bitcoin flows into it. And I think that is a sign of its intuitiveness and its resiliency and its ability to find its way into cracks and creeks all over the world on the internet and in different places. And I think you'll continue to see it expanding, and it'll feel very similar to the way it did with the internet, and it already is, right? I mean, 50 million people own this thing. And you know, the internet, all of a sudden, you talk to your mom and dad in 1994 about doing banking online. That was ridiculous, right?
Yeah.
It was about email and kind of IM and maybe surfing the web.
I was scared to use my credit card in the
Yeah,
beginning.
we all
I
were,
was,
right?
Like my heart was like pumping.
Yeah, we all were. And you know, I mean, even today, like I'm not gonna lie, like sometimes like whenever a big Bitcoin transaction goes, sometimes like, you know, but it just comes. I've only been doing it for 7-8 years. So you know, I've been swiping cards for a lot longer, right? And I think that's just a part of the story. It's part of the narrative, and more people that come into the system get more years under their belt, and it starts to gain that trust, just like the internet did, and any other technology we've used. But you know, again, going back to those numbers, one of the most under talked about things is the market cap of Bitcoin to the number of people holding it. I challenge you to find 5 other assets in the world. Silver's one of them, but 5 others that have as high of a distribution ratio of its market cap to the number of people holding it.
That's a really cool metric. Actually, it's the first time I hear that metric. So thank you so much for
yeah,
sharing that.
It's cool.
That is really, really cool. Earlier, you told me something really contrarian, really interesting. Like we're talking about whether Bitcoin is an actual currency. Is crypto an actual currency? Is it a unit of count? Is it a means of exchange? Is it a payment method? But you were actually saying that it doesn't need to be that. We're just digging a hole. Your approach is everyone is hoping that, okay, we ticked all the 4 boxes to be a currency, but you do not necessarily see it the same way. Do you mind sharing that point of view?
Yeah, I think it is a fallacy. It is an improper classification to call it a currency. You know, that is a subcategory of what Bitcoin is. Bitcoin is much larger than that. In fact, we're unable to define what Bitcoin is. Bitcoin is an ideology. It's literally an ideology. It isn't just a currency. And when you have different platforms that are trying to compete with Bitcoin on one of its subcategories, I think ultimately it's a losing game. You'll have like newer cryptocurrencies that are trying to be just a medium of exchange, or forks of Bitcoin that are trying to just be medium of exchange but not the store of value, are missing the bigger picture. You know, Bitcoin is an extension. It's a little technical, but it's like an Austrian economics ideology that is 5,000 years old. It's the idea that money itself, not currency, but money should be hard to create. It should be difficult to produce. It should be very difficult to replicate. And that goes against what the mainstream money is today. Now, whether it's easy to exchange or not, it is incredibly easy to exchange. The reason it's not being exchanged right now is because it's too volatile. Now, all the other exchange tokens that are backed by belief are also going to be just as volatile as Bitcoin. So that's why I think it's a fallacy that Bitcoin or any digital asset that is backed by belief, which is what they all should be backed by, to truly be different than the legacy system, has to be a medium of exchange first. Rather, what it has to be is it has to win the rights of being a store of value and a monetary unit that is separate from the legacy system first. Once it wins that war and that battle, then the easy part is the exchangeability. I mean, this thing is divisible by 100 million. We can send it anywhere now with Lightning Network instantly, and there'll be 50 other versions of Lightning Network that we probably can't even think of in the next 20 years. The easy fight is speed. The hard fight is winning the global belief structure that this is a monetary unit that exists wholly outside the legacy system and is incorruptible by the powers that exist on the other side of the fence. So that's the real fight. And if you try to build an exchange token that isn't backed by something completely outside of that, then you're going to fall into the same trap that all the other ones are. I think the stablecoin market and the concept of like global coin or tether, it serves a purpose, and it will have a shelf life in our progression of an ecosystem for sure, and it already is. It's a massive benefit for companies like ours or others that want to go and move money around faster than the dollar can. However, none of them are going to be as successful as Bitcoin long term, because what Bitcoin's doing is it's capturing this assets, the bigger picture that I'm referring to, that is completely disintermediated from the legacy system. There's nothing that anyone else can do to shut that down. So the easy part long term is the media of exchange. The hard part is getting the belief structure to rally behind something, because unless you back a monetary unit by belief, it's going to be backed by something that is trusted by some authority. And sorry, we've seen how that story plays out, and it plays out very bad.
Plays out very bad. That's a really, really good point. So could Bitcoin become like a gold 2.0 eventually if it reaches that
It already
level?
is.
It already is.
Absolutely.
Yeah.
I mean, I think Bitcoin is going to be within the next 50 years, Bitcoin will be the world reserve currency. It will be the economic hegemon, as they say. And typically, world reserve currencies have about 120-year shelf life. The United States is approaching its 100-year. In 1920, it became the world reserve currency. So we're approaching that 100-year shelf life. And I think if you're telling me right now that a blockchain-based monetary unit that is borderless will not be the next reserve currency, tell me what is. If it's not Bitcoin, maybe it'd be some iteration of Bitcoin, but I highly doubt we'll see another iteration of Bitcoin be able to overtake Bitcoin, because the concept of proof of work is so pure and beautiful. I mean, you can't recreate proof of work from the start, because that chain has a very high capability of being attacked. So that's why Bitcoin has this, not only it has this secure starting point from its beginning, and I think it's just going to continue to snowball.
That is so, so cool. So Ryan, the other day we had a really interesting discussion together about stable coins backed by fiat currency. Does that defeat the purpose, or what are your angles on having that approach as of today?
Yeah, I mean, I don't think, look, I don't think it's certainly not going to compete with, again, that ideology I'm referring to and that hegemon of what Bitcoin is as a unit. I think stablecoins have a very important play in our development as an industry right now. And I think they have already served, we're now at like $4 billion in stablecoins globally in terms of market cap. The problem with them, though, is that they're basically, with all respect to the people that are running these things, most of them are smaller banks with like a crypto lipstick on, you know, and I mean, to be honest, they're one phone call away from the SEC to where, sorry, the music stops. And so what I think is interesting are the following things. I think in the area where we're investing, Coinshares is investing heavily with a couple other companies on investing our stable coins that are completely disconnected from the legacy financial system. So gold-backed coins, physically backed coins, where you can deliver these coins to a custodian and redeem them, where you don't need a bank to settle and clear these things. You don't have to worry about the SEC or someone else calling up and shutting that bank off, providing access to the market. I think that's going to be the trend, and also includes, this is an interesting one but very controversial, there's a few groups that are working on what's called a physical dollar coin, where you literally put dollars in a vault and euros. And where that gets really interesting is that as euros start to charge a negative interest rate for holding them at a bank, you can take your physical euros out of the bank and put it in a vault, and you can hold the coin. So therefore, it's kind of it supersedes the ability for the central bank to and banks to charge negative interest rates on currencies. So that's an interesting thing to watch. There's a few groups that are looking to do that. They're called physical dollar and physical euro coins. Yeah, it's very interesting.
Do you see potential in that space as well?
Again, I think it's a shelf life,
it's
right?
Shelf
I think
life, yeah.
I look at all of these as like Trojan horses, right? Like global coin coming out. It's what we've heard. I haven't seen the official white paper or whatever we're going to call it, but you know, I'm hearing it's going to be a basket of a few different currencies, like the IMFs or the ADRs and kind of these complex things. I view it as a Trojan horse. It gets us behind the enemy wall, and then once we're behind that wall, the Bitcoin guys are going to go crazy, right? So I think you know, I think what it does is it teaches people how to use double key cryptography. It teaches people how to use, you know, send private keys. Wallets become more widely used. That they integrate Bitcoin rails directly into that because it's super easy, and ultimately it just adds more liquidity, more attention to our space, and Bitcoin's position as a leader will just become a larger position as more and more excitement happens. And that's why I view the Facebook coin and all these other coins as a net positive to Bitcoin and our space. I don't view them as a negative, even though I'm a huge Bitcoin believer and fanatic.
That's a really good point because when Facebook faced a few scandals, if there was another platform, decentralized Facebook, that had the same friends, and they would have moved right to the other space. So you're right. If people don't like the global coin or the Facebook stable coin, they might get interested in Bitcoin. It might drive some traffic in that sense.
Yeah, I think there's one fallacy though that there's a lot of confusion in the market. I mean, people always talk about I'm going to build a decentralized Facebook, or I'm going to build a decentralized XYZ. The fact of the matter is blockchains actually are pretty inefficient.
Yeah.
If you look at blockchains and from a computer science standpoint, distributing data and have consensus every 2 or 10 minutes, whatever it is actually a computer science issue.
Yeah.
So the core concept, I believe, blockchains should have as little information on them as possible and should be used as validation utilities, right? To validate things of data structures that are held held yourself. So the core blockchain shouldn't have all of our data on it, right? Our data should be stored with us where the service is validating whether stuff is real or not. And I think what's interesting you'll see with Facebook and these others is you're going to see this trend in tech start thinking about how little data can we store, right? How few data points and lines of codes can we have about our users? And I think the blockchain industry has really been a massive awakening into that and is helping that movement.
Those are some really good points. Actually, the co-founder of our company was hoping that, when Facebook was kind of hinting about cryptocurrency, that they would develop a digital ID system.
Yeah.
You know how you can log into websites with, check in with Facebook or log in with Facebook to make the experience better for you. Do you see digital ID being incorporated in smart contracts eventually so that it's even more transparent and can build trust with regulators or people who have issues with the darker side of cryptocurrency?
Definitely. I think it's, I think ID is probably one of the most massive parts that you can use to validate, blockchains can be used to validate ID very quickly. And I think I'm a little upset that Facebook didn't start with that first.
Yeah,
there's a lot more, there's a lot more, there's a lot more humanitarian benefits that they could have attacked with that first as opposed to a monetary unit. But, let's see. I think what I like seeing is Facebook coming out with their own coin. I like seeing them tweeting about deploying 100 nodes all over the world. I mean, that's cool stuff, right? So I don't think we're 100 miles away from Facebook rolling out their own identity products. And when that happens, watch out. I mean, it's going to be very exciting. I'm super, super pumped for that.
Definitely, myself as well. Really looking forward to developments in the space. One last topic that I want to address with you, Ryan, is you guys have played a critical role in getting interest from the institutions and driving people into this space. You have obviously the first index that everyone can track, and I think that's when people use TradingView, they see you guys, they know that you're online, and they get curious. So. What I would love you to say is, could you explain to the kind of the beginners out there, the millennials, what is an index and what are the ETF and ETPs? These are difficult terms that we hear a lot about recently in the news. That would be awesome.
So Coinshares, what we do is we're kind of in this position where we bridge the digital asset space with the legacy investors. And how we do that is we've figured out from a regulatory framework how to put Bitcoin as if it's trading like a stock. That's particularly helpful for people in Europe that have retirement accounts. So you can click just like it's any other stock and buy Bitcoin. Now we're storing it for you, so it's not your keys, which is the downside, but that enables you to buy it quickly like it's a stock. It enables institutions to be able to buy it because it's trading on a registered, regulated market. So that is filling a need to help people get into Bitcoin easier. So that's what we do, and that's what an exchange traded product is. It helps people buy an underlying asset, whether it's gold, whether it's Bitcoin, or a collective group of these commodities, very easily like it's a stock. And you benefit from the liquidity, the ease of access, and being able to access it from things like retirement accounts or institutions that have to trade on a regulated market. So that's what we do, and that's where we've been successful. I mean, today we've got about 800 million in assets now in Bitcoin, Ethereum, and XRP and Litecoin, and we're only seeing that grow, and we're very excited.
Litecoin ride was pretty bonkers.
Yeah, it was. Lately's been great.
Litecoin has been doing really well this year. That's really, really cool. So you talked about ETPs, you talked about your index. ETF, just one last thing related to institutions. This is such a huge topic. We have the guys at Van Eyck here today as well. What is an ETF and why is this such a massive topic in most almost all the headlines on the news these days.
Yeah, I mean the ETF, so in Europe we don't have single asset ETFs. In the US you do. So they're exchange traded funds. In Europe we call them ETNs or ETCs. And the nomenclature gets a little confusing. An exchange traded fund is a US structured product that enables Bitcoin to be traded like a stock. Just like our products are exchange traded notes that enable Bitcoin to be traded like a stock as well. Different regulators have different laws that enable these things to trade differently. So they're very similar in structure. Some slight differences in terms of the risks and others that need to be looked at in the prospectus, but it's very similar. And the reason why it's such a big deal is because, again, in the US right now, there's 55 million accounts, retirement accounts, that equates to $28 trillion of assets. None of that can buy Bitcoin right now. So when you think about the addressable market of what an ETF could serve, that's how big of a market it could open up. So everyone's saying that once a US ETF hits, then it's going to open up Bitcoin. And if you look at what happened to gold, when gold listed an ETF in New York, it also massively ramped up the price as well. So I think that's what everyone's looking at. And they look at what we've done in Europe and they see the success here, which is a much smaller market. And if someone can crack the nut over there, there's a lot of people trying. The Van Eck guys are great and the Winklevosses.
Yeah.
Yep. They're all trying, but they haven't been able to crack the nut with the SEC yet. And I think it's coming though. I think it'll be soon. Meantime, in Europe, we're cracking along and we've had great success and we continue to see more.
Do you feel like, I just moved to the UK in January, but it feels like things are boiling here.
Yeah.
Obviously in terms of adoption, in terms of investing in Bitcoin as a speculative asset, I was in Japan, for the past 11 years, and the Japanese yen was driving the entire market. At the peak, it was 52% was coming from Japanese yen.
Yeah.
Chinese yuan, obviously they were limited, but they were converting to Japanese yen as well to buy crypto. And then it tends to come later in Western Europe, where it's a little bit slower. But do you feel something's boiling, something's cooking these days?
I would like to agree. So I view it in two ways. So first of all, I look at GBP and Euro volumes compared to dollar and Korean and volumes, and we're not there yet. I think part of the reason why is because there's more like in Asia, you have a higher speculative culture than we do in Europe right now. And still, if you look at the percentage of Bitcoin trading, it's still a high percent speculative.
Yeah.
Whether you believe in all the things that I said earlier or not, the data tells us that. So Europe, traditionally speaking, is a much slower speculative environment. Part of the reason that bonds are a lot more popular than like equities are, because equities are more risky than bonds are. So I think the UK specifically has a massive explosion of energy around development, around appetite, but the volumes still are, the dollar and Korea are still massively ahead. So I want to see the volumes pick up in terms of the energy, like what between the UK and Switzerland, the companies that are building products here is definitely an explosion. The volumes though need to catch up. Definitely. Yep.
That is amazing. You have such a wealth of information, Ryan. I think you're going to have to come back. I'm sorry.
I would love to come back.
We're going to have to oblige you to come back.
I'll tell you what, why don't we come back after the next Bitcoin monetary halving in May? And let's...
Not before that?
Well, we can do that.
That's long.
But I think we're going to see, I think the 6 months following next May are the most important 6 months that exist. And here's why. If Bitcoin can diverge from other global risk assets like equity, US equities and NASDAQ, if its pricing can diverge from the issues going on where Chinese-US trade war kind of depresses risk assets, then we could see Bitcoin move to the likes of 40 to 50,000 very quickly. And I think the combination of the structural fundamentals of Bitcoin that are improving with the hope that we see Bitcoin diverge from other equities and risk assets, I think it's going to be a particularly interesting time in the next 12 months. I'm eyeing the next 6 months after that monetary halving as the target, because a lot of the legacy economists I'm talking to are viewing that time frame as a critically important point around the summer of next year of what's going on in the US-Chinese trade war. So you combine this macroeconomic story around the trade wars with Bitcoin's monetary halving, it's super interesting. So let's see what happens.
There's so much, actually, just to add a little point on that, like our CEO was actually looking at, right after Xi Jinping announced that they want to devaluate the Chinese yuan.
Yeah.
And then suddenly there was a bull run literally a few hours after the news. So making people think that is there Chinese yuan starting to park their money in Bitcoin because they're afraid of the valuation of their own local currency. And
yeah, I mean,
the trade wars are pretty crazy, right?
That's exactly the right thing. I mean, I think what's interesting, the narrative that's going on right now that I'm most excited about is that we've gone from the discussion of why does Bitcoin exist to talking about Bitcoin in terms of a macro context, right? In terms of what is Bitcoin doing relative to equities, relative to commodities, right? It's now it has a seat at the table. And as it develops that seat at the table, you'll start to see more and more serious players start to look at it as an alternative investment. And the most important thing to watch, as mentioned, is how does it behave versus other risk assets? Because if it diverges like we're expecting it to, watch out, because there is no top of how high it can go, and there's no bottom. Well, technically zero is the bottom, but it will remain volatile. But watch out, because if we catch a divergence from other equities and things like that, there's no telling of how big the next run could be.
And just to illustrate that point on the halving, so could you explain to us, or for the people out there, what is going to change in terms of mining and the rewards they'll be getting after the halving period?
Yeah. So one of the things when we talk about the beginning, why I love what has me so excited about Bitcoin versus the legacy system. In the legacy system, a group of bankers look at some data, talk to their buddies over at the big banks and say, how much money should we print? And then they decide that. Bitcoin has a mathematical equation that says, here's how much money is going to be printed, and every 4 years, that's going to be cut in half.
Cut in half, yeah.
Right? And that cuts in half every single 4 years until the year 2140, roughly. And that is the first time we've seen a money issuance that is completely calculated and programmatic. So what happens is, in the last 3 times we've seen this, we've seen the price really move around the times where the money supply, the new issuance of Bitcoin, is cut in half. So what will happen in May of next year is the amount of new Bitcoin that are created every 10 minutes in a new block will be cut in half. It'll go down half from what it's today. And if you study economics, you don't have to really study that much to know when you start messing with supply demand, when you cut supply but keep demand increasing, what happens to the value? It goes up. And we've seen that happen the last couple of times that the supply of Bitcoin has been cut in half. So that's why I'm particularly interested to see what happens the 6 months following this May. When you look at it in terms of the supply being cut, demand going up, and the macroeconomic conditions deteriorating. That is where you have a recipe for a massive, massive move.
We will be hopefully popping a bottle of champagne at that time, right?
I hope, yeah, hopefully.
Thank you so much, Ryan, for everything. It was absolutely awesome having you. So should we follow you on Twitter? Twitter is a good source.
At Ryan Radloff is Twitter. Follow at Coinshares Co as well. We're going to continue kind of moving the narrative on really tough things that face the Bitcoin ecosystem. An example of that is one of the hardest things to look at and debate is whether Bitcoin is good or bad for the environment, right? And most recently, Coinshares just came out with a report that proved that 75% of Bitcoin is being run on clean, renewable energy.
Yeah,
right? So these are the things that I tweet about, that Coinshares is really trying to solve and communicate to the market. So would love you to join and everyone else to join the conversation.
Crypto community, thank you so much from the bottom of my heart for everyone, from the very early adapters when we only had 3 or 4 subscribers all the way to now over 2,000 subscribers and only 12 interviews. We are over the moon, and this is thanks to you, the No BS blockchain channel built with the community and for the community. And unfortunately, we have a bit of a sad message, and that is this is the end of our journey. Until season 2, we will be back on October 2nd, every Wednesday at 8 o'clock GST, premiering at a PC near you. And we're coming out with a new format, a fresh look, and the ability not only to learn but earn cryptocurrency by simply viewing, just like the Swissport Community app. And for those who do not have the Swissport Community app yet, remember, there are 3 core advantages. Number 1, you get access to cyborg prediction algos that will help you predict the price of Bitcoin better than 88.4% of all our users. Number 2, you will have access to the daily Bitcoin analysis made by financial professionals. And number 3, you'll get the chance to learn about Bitcoin, but also earn Bitcoin and the Swissport token, the CHSB token, just for having fun. So go ahead, download the community app, and in the meantime, don't forget to connect with us on all platforms so that we can get your feedback, your questions, which speakers you want to really make this a no BS blockchain channel built with the community and for the community. Look forward to having you guys soon. See you on season 2.